There's going to be a time where you have to ask yourself a very important question. Which came first, the chicken or the egg? I'm kidding. That's easy. The egg. Later in this video, I can tell you why if you really want to know. But let's get back to the real question that you might have to actually ask yourself in the near future. If you are considering starting and running a candle business, or any small business for that matter, and by the way, this includes if you already run a business and you're just trying to take it to the next step. And that question boils down to, how do I set up my business? That's really a loaded question. There are a ton of things to talk about when it comes to setting up your business. But specifically today, I'm going to be kind of overviewing a very basic, fundamental, but important question when it comes to your business. And that is whether you should be running a sole proprietorship, an LLC, or an S-Corp. And what is the difference between the three? There are pros and cons to each one. There are reasons to use each one. And there are certainly times where it makes the most sense to use one over the other. Not the sexiest topic of all candle or small business topics in the world, but I hope that you enjoy this video and take something out of it. So let me start off with saying the obvious. I'm not an accountant. I'm not a CPA. And I'm not a business attorney. So take this as general information, me providing you some general information about this topic. And then I would encourage you with this information to talk to your accountant, business attorney, an online resource, something that you can trust that is an expert in the field to really guide you more specifically. But I see this question debated and talked about all the time. And I've seen some other videos that talk about this topic. And I feel like some of them are a little misleading, or at least not covering some of the important aspects about this. So I wanted to make a video. I've been asked about it quite a bit over the past 6 months. Hi everyone, if you are new to the channel, my name is Wade, the owner of Black Tie Barn. Welcome to the channel. I would love to have you around for future videos if you're interested. So hit subscribe below if you'd like. And if you enjoy this video, you get anything out of it, I would also appreciate a thumbs up. And I also want to thank the sponsor of today's video, which is Skillshare. All right, so I'm going to talk about the differences between an LLC, a sole proprietorship, and an S-Corp. Their major differences, some pros and cons of each, and some tips on when it might be best to use one over the other. So I want to start with the basic underlying concept here. When it comes to businesses, you're talking about a business structure and a tax structure. They are not the same thing. A lot of people talk about them as if they are the same. For example, in other videos I've seen talking about an LLC versus an S-Corp, that's not really a question of one versus the other. In fact, we'll get into this a little bit later, but LLCs often are combined with an S-Corp. So after I get into some of these details, I'm going to make this fairly simple later to understand how it all works together. But there is a difference between a business structure and a tax structure. So the business side is how you set up your business legally, like its structure. But your business also has the ability to file taxes under its own tax classification or tax structure. And so there is a difference between the two. And I wanted to point that out before we get started because I'm going to refer to that a couple different times. So let's start with some of the classic business structures. The first one we're going to talk about is a sole proprietorship. This is the one that you're probably most accustomed to because this is also the one that you are by default. The moment you start a business until you form an actual structure, by default, you are a sole proprietorship. A sole proprietorship just means that you as an individual are doing business and there's no separate entity between you and your business. Now you can do this business under a different name, which is called a fictitious name or doing business as. So if you've ever seen a DBA or doing business as, that's an example of a fictitious name. So most states you'd simply register the name that you want to do business as. But it's still a sole proprietorship. It's still you as a person doing business. And again, this is how you would start by default. Now let's talk about some of the pros and cons of this. The first and most obvious pro is that it's just the easiest and the simplest because you don't have to do anything special for the most part. There's still some other business things that you need to do in order to properly operate a business. But as far as setting up a structure, there really isn't anything to set up. You can get a fictitious name if you'd like to, but other than that, there's not much to do. Which also means it's very cheap because you're not creating any structures, you're not filling out special forms, you don't have to hire professionals to help you do this. Another advantage of this structure, which honestly applies to the other ones we're going to talk about today as well, is that there is no double taxation. You're only going to be taxed on your profits, and your profits in this case go through your business to your personal tax return. And so you just pay taxes once. An example of a structure that does suffer from double taxation is a C corporation. And we're not going to talk about it in this video because it really doesn't apply, but just know that one advantage of being a sole proprietorship is you only pay taxes on your profits once. Another advantage is that you do not have to file any separate tax returns. The business and the individual are the same in this case. So there is no separate business tax return you have to file. You would file your own individual tax returns like you normally would. The only difference is, and many of you probably know this, is you do fill out a Schedule C form, which is just highlighting basically basically your cost of goods sold and your expenses on a separate sheet that gets included with your individual tax return. So again, pretty simple. Another benefit is that there are no payroll taxes, and that's because there's no payroll. You are the owner of the company and all your profits pass through to your individual tax return. You don't pay yourself a paycheck that has tax withholding and any of the fees and services that come along with payroll taxes. You can just simply take an owner withdrawal because you and the business are essentially still the same. Now, with all of this ease of use and no separation between you and the business, there are also some disadvantages. First of which many of you probably also know is that there is not much legal protection or protection from liability in your assets when it comes to running this type of business structure, which means your personal assets can actually be up for grabs as well. Now, there are exceptions to this rule, and there are other things you can have in place to help, like insurance, but still, there is no or limited asset protection when it comes to running a sole proprietorship, because again, there's no distinction between you and your business. Another disadvantage that's often overlooked, and we can touch on this a little bit later when we get to the S-Corp, is that you are paying more in self-employment taxes when you are a sole proprietorship. And I'm not gonna get into all the details and all the weeds of this video. This is supposed to be an overview video to get you thinking about the major differences, but I would definitely seek out a professional in this when the time is right. But long story short, because all of the profits fall to your individual tax return, you're not taking a paycheck, you're not taking a salary, that means you are taxed self-employment tax percentage on 100% of the net profits. Not a percentage of them, but all of the profits. So you do pay more in self-employment tax up to a certain amount than you would with something like an S-Corp, which we'll talk about a little bit later. For the most part though, if your business is making under $50,000 in net profit, this isn't something I would really worry about because until you reach that threshold, there really is no advantage you gain by changing. Okay, so I think most of us are probably fairly familiar with what a sole proprietorship is. You're doing business as yourself and there's no distinction between you and the business. And we talked about some pros and cons. So who is this best for? Well, this structure is simply best for people who are just starting out and people who basically have a hobby that also tends to make a little bit of extra side income. And that's really what it is, hobbyists that make a little side income. But remember, everyone starts as a sole proprietor. And then it's whether you want to take the next step to move towards another business structure like an LLC. So don't feel like that this step is not good enough. Everyone starts this way, and for a lot of people, this is completely fine, at least for a period of time. So the next business structure that you're probably familiar with is called an LLC, or limited liability company. And the benefit of an LLC is it has a lot of the ease of use and the pass-through taxes as a sole proprietorship, but it has some protection of your assets as well. The reason that that is possible is the biggest difference between an LLC and a sole proprietorship is that an LLC creates a business that is a distinct, separate entity. Instead of both being the same, run through you as a person, there is a separate business in place from you as the individual. Now, by default, taxes act the same way in an LLC as they do with a sole proprietorship until you elect to file them differently. So what I mean by that is a sole proprietor, all the net profits flow through your business into your personal tax return. With an LLC, it functions the same way. Now, there is a difference whether or not you are with a partner, but let's assume you are a single member LLC. In that case, taxes by default will flow through your business, and then you still file them with your personal tax return on a Schedule C, just like you did as a sole proprietorship. So there's no difference here with tax classification for the most part. The biggest difference so far between an LLC and a sole proprietorship is some better protection of your assets because you have a separate business entity. So other than your simple tax implications and your asset protection, what are some other advantages of an LLC? Well, one is that it's just a little bit more official, and that's simply because you have a separate business entity. You're gonna have a bank account and other things under your business name and classification and your business tax ID versus you as an individual. So it's just a little bit more professional. Think of it, it's similar to having a business that has a business domain for your email address and website versus one that's just a Gmail account. Another advantage of an LLC is that it is flexible. So you have the ability to be a single member LLC, which is just you as the owner, or a multi-member LLC, which has pretty much unlimited owners. And there's a lot of flexibility into how you structure your business and how you file your taxes, which we'll talk about here in a sec. Now, there are a few disadvantages, depending on how you look at it, to an LLC as well. And the first of which is that it is more costly than a sole proprietorship. Mostly because the sole proprietorship is free and an LLC is really not. Depending on state, because it will vary, the cost to set up and file an LLC can range usually anywhere from $100 up to $500 or so. And maybe even more than that if you're using some professional services to help you out, like hiring a business attorney or using a service like LegalZoom. It's not super expensive in the grand scheme of things when it comes to running a business, but it is still more expensive than a sole proprietor. There's also slightly more overhead involved. And while it's not overly complicated because there are services that can help you, you do have to file a couple things things like an articles of organization and your operating agreement, which is basically saying how you will structure and run your business. And this is just some paperwork that you file once, and it gets filed along with the paperwork when you create your LLC. So what businesses is an LLC best for? Well, it's just the next most common progression after being a sole proprietor. So if your hobby is starting to grow into more of a scaled business, you're getting more sales, more revenue, and a lot of the times you'll know, you will sense that you have gone from just a hobby to selling a few items here and there and actually moving into more of an actual business where you've got a little bit more consistency of sales. And so really, I guess that's the answer, is it's about scaling. So it's the next logical step. And I would honestly recommend that you make this change sooner than later. I don't think there are really any reasons not to go to an LLC versus a sole proprietorship, other than some of the extra costs associated with it. But other than that, if you can afford to do that, then I think it's a much better, safer approach than just staying as a sole proprietor. So the answer is it's usually just the next logical step to take, and it's up to you when you're ready to do that. But again, and I'll say this multiple times, be sure to contact your CPA or a business attorney or some kind of service to help you out and to help you decide when that time is right. All right, so now we're going to talk about an S-Corp, and this is when things get interesting, because a lot of the confusion starts right here as well. So a lot of people will tell you that you need to go from an LLC to an S-Corp. And here's all the reasons why. Well, first of all, a lot of those reasons are debatable. There's a lot of things to consider when you're trying to determine whether or not an S-Corp is right for you. But the biggest problem here is that an S-Corp isn't a separate business structure. It is a tax classification, meaning you don't have an S-Corp by itself. You need something else along with it. And often what people are doing is using their LLC to file taxes as an S-Corp. So that is what I want to talk about today, and why and when that might make the most sense. So let's rewind just a minute and let me clarify a little bit more about what an S-Corp is and hopefully shed a little bit more light on this subject. So again, we talked about business structures so far. Your sole proprietorship and your LLC. Those are business entities, business structures. An S-Corp is simply a way that your business pays its taxes. It's the way that your business is taxed. It's tax classification. Just said tax a lot of times. And here is what the S-Corp tax classification is in a nutshell. It basically maintains the protection and the advantages of an LLC, and you get some of the tax benefits of a corporation. So a lot of companies that are LLC will continue to file their taxes the same way they always have, as a pass-through entity, which is what we've covered so far to this point. And then once the revenue, their net profit reaches a certain threshold, they start to consider now, instead of filing taxes as an individual, as a pass-through taxation to my personal tax return, that I want to start filing a separate business tax return to get a few additional tax advantages. And that is when they file as an S-Corp. So yes, you can be an LLC that files taxes as an S-Corp. Try to remember that an S-Corp is a tax classification. It is not mutually exclusive from an LLC. And I want to make sure that I'm saying that thoroughly and correctly, because I have seen other videos on this topic urging you to change from one to the other. And that's not how it works. You can be an LLC who files as an S-Corp. So the advantages of an LLC filing as an S-Corp really boils down to two things. All of the advantages of an LLC, like asset protection, and some tax benefits when it comes to self-employment taxes. So if you remember earlier in both the previous examples, your net profits from an LLC by default and a sole proprietor pass through the business to your personal tax return, and you pay self-employment tax on all of those profits. Well, in an S-Corp, as opposed to an LLC, when you want a cash disbursement, you no longer just take an owner withdrawal. In an S-Corp, you actually pay yourself a salary, and you only pay self-employment tax on the portion that is salary, which you can imagine could be significantly different than paying self-employment tax on all of the net profits that your entire business made. Now, I know you're thinking, well, shoot, in that case, I'll just take a very small salary, like itty bitty, so I don't have hardly any self-employment tax. Well, the truth is there are some rules to this. The IRS does force you as an S-Corp and the business owner to take a reasonable salary. Now, what is a reasonable? Talk about a very ambiguous rule. Well, for the most part, look at other businesses similar to yours and what an expectation of a reasonable salary would be as an owner of that business. Well, when you're a small business handcrafter, that range can wildly vary. So you probably have a little bit of wiggle room on what a reasonable salary is, but if your business is making $500,000 a year and you're taking $10,000 salary, that's going to be a red flag. Long story short, you have to determine what a reasonable salary would be, and then you're only paying self-employment tax on that percentage, which means you could be saving a lot of money in self-employment taxes if you're an LLC filing as an S-Corp. But with all good things also comes some drawbacks as well. First and foremost, it is more expensive and a little bit more complicated to set up. There are more forms and more fees to file as an S-Corp. Generally speaking, the bigger your business grows, the more expenses you're going to have. And the IRS and the government are not going to miss out on their cut. Next is that this is the first of the options we've discussed today that will file its own separate tax return. So your individual tax return will still happen normally, with your salary included, and then your business will file a separate tax return. Now, whether that's a pro or a con is kind of up to you and depends on how you look at it, but there's a little bit extra complication, but that also means there's additional costs with filing another tax return. There's also more overhead to running an S-Corp. There are other certain requirements and regulations that you have to meet, and we're not going to get into all those details in this video because most of them are just kind of business operating type of requirements, but it boils down to basically having some meetings with some minutes involved and a few other things as well. But again, if this is something you're going to consider, there are plenty of resources on YouTube or online or with any other professional that can help point you in the right direction. It's not too bad. It's just be aware that there's more overhead than there is with something like a standard single member LLC and certainly a sole proprietor. So when does it make the most sense potentially to go from a standard LLC filing taxes the default way to an LLC filing taxes as an S-Corp? I would give you three answers. One is if you're really expecting more consistent growth, that's a time to consider it. And secondly, if your business is already making over $50,000 a year in net profit, then it's time to consider that as well. Because depending on who you ask and all the number crunching, the $50,000 net profit threshold is usually the point where the tax savings from the self-employment tax savings outweighs the additional cost of filing as an S-Corp. Now, that doesn't mean that anything over $50,000 means that you should file an S-Corp, and it doesn't mean that anything less than that means you shouldn't. That's kind of a good barometer of where your business is and whether or not you should probably be considering it. But again, I've said multiple times, the key is being aware of this information so it makes sense to you, and then working with your accountant, a CPA, or a business tax advisor that can help you make this decision and explain it to you a lot probably better than I can. Which is also the third time I was going to recommend when it makes sense to file as an S-Corp. And that's when a business tax advisor or CPA advises you to. By the way, if you are looking for a bit more info and help with any of these, sole proprietorship, an LLC, an S-Corp, then I would recommend checking out this class on Skillshare called Quick Start, Business Setup, Accounting, and Taxes for Freelancers by Alex Winkler. He covers each of the ones that we talked about so far in today's video, but in more depth. And you can take this class absolutely free by using the link in the description below, because the first 1,000 people to use the link will get a 1-month free trial of Skillshare. If you are new to Skillshare, it's an online learning community with thousands of classes at your fingertips. And I'm talking unlimited classes on a variety of topics like business, crafts, self-improvement, productivity, and so on. We're creeping up on a new year, which means new resolutions, new hobbies. Kind of a perfect time to check out Skillshare if you haven't already to help you achieve some of your new or not so new goals. So consider rewarding yourself this holiday with an opportunity to improve or learn something new. Again, at the end of this video, definitely check out the link below because the first 1,000 people to use that custom link will get a 1-month free trial of Skillshare. Let's get back to the video and I want to cover some of my final thoughts and tips going forward. So let me highlight and recap a few final thoughts here, and then I'm going to convince you that the egg came before the chicken. So the first is a special note about insurance. Regardless of any of these structures, I would have insurance. Insurance will provide you some protection that none of these business structures can. It also has nothing to do with your tax structure. In my opinion, having a general liability insurance at the very least is a must, and then having some product liability insurance is an advantage if you can get that as well. So definitely keep insurance on the forefront of your mind, and I think regardless of what option you choose to go with, make sure you've got adequate insurance and work with an insurance agent that you trust. And then I want to really drive home one more time the difference between a business structure and a tax classification. An LLC and an S-Corp, they're not mutually exclusive. You can be an LLC, a business structure, filing as an S-Corp, which is a tax classification. Hopefully that makes sense. If it doesn't, let me know in the comments and I'll try to provide some resources or something that can help you, because while I understand a lot of this in my own head, doesn't mean I'm relaying it properly to everyone else. And then my final tip is to start as a sole proprietor, which you probably already have and you will by default. And as soon as you want, move to an LLC. And then under that LLC, you'll file taxes as you normally would as an individual. And at some point, if you get your profits to $40,000 or higher, should I be considering an S-Corp at this point? Okay, but back to the most important question we've asked today, which is which came first, the chicken or the egg? And honestly, this isn't even a debate. It's the egg. My extensive research has led me to understand that eggs have been around a lot longer than chickens, and that the first chicken egg was actually laid by 2 different birds, and the egg that they laid hatched into a chicken. And it's also just hard for me to imagine that one day, boom, there was a chicken. The chicken just popped it. Like, there it is. Like 1 second, hey, there's no chicken. And now all of a sudden there's a chicken. That just seems weird to me. I don't know. That may have not convinced you, but that's just my take on it, and I'm pretty sure it's right. So let me know in the comments, do you agree with me that the egg came before the chicken? Or if you think the chicken came first, let me know why, because I'm super curious. I probably won't believe you, but I'm curious. All right, thanks for tuning in. And once again, thank you to Skillshare for sponsoring today's video. The first 1,000 people that click on the link in the description below will get a free 1-month trial of Skillshare. Check out this next video, and I'll see you guys next time.